I'm Doris. I'm here to share with you about my stock account. Today, my stock account has lost $2,224. The Nasdaq closed mixed up 0.95%. So let's first take a look at my account. Today, right now, the net asset of my account is $67,413.71. Today's PI is a loss of 3.08%. The market generally closed higher as a rebound from yesterday. Nasdaq Composite Index closed up 0.95%. S&P 500 closed up 0.37%, and the Dow Jones Industrial Average closed down 0.01%. The industry is closed mixed. Fed Chairman Jerome Powell said 2 more interest rates this year were appropriate and thought the U.S. economy could have a soft landing and cut interest rates next year. Many European central banks have raised interest rates. The Nasdaq and the S&P 500 rebounded after 3 consecutive days of losses. Fed Chairman Colin Powell's comments on higher capital requirement for larger banks and the banking sector generally lower. 3.7 Chief Equity Strategist at Bank Wealth Management said the Nasdaq closed higher today, but then the index closed down yesterday. The stock market appears to be in pause mode. The tug of war between the bull and the bear camps is in balance, which means that the uncertainty and volatility will increase in the foreseeable future. U.S. stocks closed down in the previous session, with all 3 major indexes recorded 3 consecutive sessions of declines. The S&P 500 closed down 0.5%, its biggest one-day drop so far in June. The Nasdaq closed down 1.2%, its biggest one-day drop since June 7th. The Dow closed down 0.3% lower. Federal Chairman Jerome Powell submitted his semi-annual monetary policy report to the Senate Banking Committee on Thursday morning. Mr. Powell said 2 more rate increases this year will be appropriate. Referring to the U.S. labor market, he said the labor market wages are still high but are moving to sustainable levels. He thinks the U.S. economy has a path to a soft landing. Inflation is expected to continue to fall with a small increase in unemployment, he said. The unemployment rate is expected to rise a little further. Still see a way to ease inflation without causing mass unemployment. He says the Fed forecasts some rate cuts next year, but it will depend on the economic conditions. If it is to cut interest rates, the Fed needs to be confident about the inflation outlook. Mr. Powell said he also needs to raise bank capital requirement for big Wall Street banks. He told the Senate Banking Committee that big banks may need to raise their provisions by about 20%. The details may also be needed to raise their provisions by about 20%. The detail may also be adjusted, he said. Powell said capital requirements will be very, very obvious to the 8 largest banks. Other banks may be some increase. Banks with assets of less than $1 billion will not be affected. In his testimony before the House Financial Services Committee on Wednesday, he reiterated that Fed could raise interest rates further to fight inflation. It was Powell's first testimony to Congress ever since early March. European Central Bank announced their interest rate decision on Thursday. Bank of England unexpectedly raised interest rate by 50 basis points up to 5%. Central Bank of Turkey by 650 basis points to 15%. Norwegian Central Bank by 50 basis points to 3.75%, and Swiss National Bank by 25 basis points to 1.75%. After 10 consecutive interest rates, the Fed kept it steady. On the economic front, the labor market reported the initial claims for unemployment benefits last week were 264,000 compared with a forecast of 259,000. The number of people receiving unemployment benefits last week was 1.759 million people, compared with an estimate of 1.782 million. Another data shows the U.S. current account is negative $219.3 billion, expected negative $217.5 billion, and the negative $206.8 billion lost. Analysts said initial claims remain rising, but continuing claims remain steady. Stable data suggests that people are being fired, but then subsequently find jobs relatively quickly. So far, initial claims have topped 260,000 for 3 straight weeks. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.